Google committed $40 billion to Anthropic, a company that competes directly with Google's own AI division. This investment, confirmed by Anthropic's official blog post in March 2025, represents the largest private AI investment on record. The strategic logic centers not on Claude versus Gemini, but on who controls infrastructure when model capabilities converge. A critical detail: Anthropic is expected to deploy the majority of this capital directly on Google Cloud Compute. Google's relationship with Anthropic extends back further than this round. In 2023, Google invested $300 million for roughly a 10% stake. Later that year, the Wall Street Journal reported a commitment of up to $2 billion, contingent on Anthropic routing its training and inference workloads through Google Cloud. In early 2024, Amazon countered with $4 billion also structured around cloud spend through AWS. Anthropic became a dual cloud customer with major investors on both sides, a structure that enabled the latest move. The $40 billion round, led by Google, values Anthropic at $61.5 billion post-money, according to Anthropic's announcement. This represents the culmination of 2 years of escalating investment, with compute routing at its core. The deal arrives in tranches. An initial close of $27 billion was confirmed, with the remainder tied to undisclosed milestones. The post-money valuation of $61.5 billion makes Anthropic the second highest valued private AI company globally, behind OpenAI's last reported $300 billion valuation. The Google Cloud Compute commitment is structured as a minimum spend obligation. While Anthropic has not disclosed the exact floor, the information reported the Google Cloud spend commitment spans tens of billions over multiple years. Focused on TPU pods, Anthropic's Claude training already runs on Google's TPU v5 and TPU v5 hardware, a dependency that deepens under this agreement. On revenue, Anthropic reported an annualized run rate of $1 billion in early 2024, per Bloomberg. By late 2024, the information cited sources placing that figure near $3 billion annualized. The gap between $3 billion in revenue and $40 billion fresh capital reflects a burn rate that requires sovereign fund-level backing rather than conventional venture rounds. Anthropic's workforce at deal close stands at approximately 3,000 employees, a lean headcount for a $61.5 billion valuation, confirming the spend concentrates in compute rather than payroll. The Claude model family, anchored by Claude 3.7 Sonnet and Claude 3.5 Haiku, reaches customers through Anthropic's API, Amazon Bedrock, and Google Cloud's Vertex AI. That multi-cloud distribution is now financially asymmetric, with Google as the dominant capital partner. Claude 3.7 Sonnet supports a context window of 200,000 tokens. The operational cost of inference at that context length, across millions of API calls at scale, explains why compute spending at this magnitude is reasonable. On the SWE Bench verified coding benchmark, Claude 3.7 Sonnet scores 70.3%. Per Anthropic's model card, currently the highest published score among generally available models. This performance justifies the infrastructure investment. Every enterprise API call hitting that benchmark runs on a TPU cycle within Google's infrastructure. Google's $40 billion investment in Anthropic restructures the competitive geometry of the cloud AI market. This sits alongside Microsoft's sustained multi-year commitment to OpenAI, which Reuters and The Information have pegged at over $13 billion in total capital through 2024. Google is now deploying roughly 3 times the capital Microsoft has put into OpenAI through a single round. The strategic logic becomes clear when examining cloud economics. If Anthropic routes even 60% of its compute spend through Google Cloud over 5 years, and the spend obligation structure makes that directionally correct, Google recovers a substantial portion of the $40 billion as cloud revenue. The investment functions as a prepaid infrastructure contract written as an equity check. This structure mirrors, but dramatically scales, what Microsoft did with OpenAI by making Azure the exclusive training cloud. Developer sentiment has been pointed. Simon Willison, whose AI tooling commentary is widely read in the developer community, noted that Anthropic's dual AWS and Google Cloud dependency creates an unusual dynamic where the model provider's two biggest cloud distributors are also its two biggest capital investors. That alignment of incentives raises questions about neutrality in model routing and pricing that neither Amazon nor Google has addressed publicly. From the competitor side, OpenAI accelerated the release timeline for GPT-5, its next flagship, which shipped in the weeks surrounding the Anthropic announcement, per The Verge's reporting. That sequencing was not coincidental. The practical consequence for enterprise buyers is a market with two heavily capitalized frontier model providers, Anthropic at $61.5 billion valuation and OpenAI at $300 billion, both deeply embedded in specific cloud infrastructure stacks. Switching costs are no longer just about model quality. They are about cloud contracts, data residency, and compliance integrations baked in at the infrastructure layer. Anthropic's $40 billion round accelerates that lock-in dynamic across the entire market. Scene 5. Three signals warrant attention from here. Anthropic CEO Dario Amodei said in the company's official announcement that the capital will fund frontier model research and deployment infrastructure. That phrase signals at minimum one major model release beyond Claude. 3.7 is planned before this capital is deployed. The open question is whether that model competes on the SWE Bench Pro agentic coding benchmarks, where Anthropic currently leads, or whether it expands into multimodal and reasoning categories where the gap with OpenAI GPT 5.5 is less defined. AWS still holds its own multi-billion commitment and distributes Claude through Bedrock. The Google deal does not cancel that arrangement. Anthropic confirmed both partnerships remain active. The capital weighting now tilts 10-1 toward Google. How Amazon responds, whether through accelerated investment in its own foundation model efforts or a competing capital injection, is the next structural move to monitor. Anthropic is expected to publish updated pricing for its API tier and enterprise plans in Q2 2025, per Bloomberg reporting. That pricing announcement will be the first public signal of how Anthropic intends to monetize at a $61.5 billion valuation, and whether the unit economics at scale actually work. Google's next earnings call, where Alphabet CFO Anat Ashkenazi will face direct questions about the Anthropic exposure and Google Cloud's AI revenue trajectory, is scheduled for late July 2025.